Namaskar traders, a very good evening. We are on the 7th of November tonight, Monday evening, 8 p.m. Indian Standard Time. We had a seesaw of a day for the Indian equity markets. I have the daily in the middle, the weekly on the left hand side, 75-minute time frame on the lower time frame on my right hand side of the chart. And it was a seesaw of a day where price fluctuated. It opened well, and then throughout the day it actually slipped just to bounce back really well towards the end and close the day on a positive note, up 70 points to end at 18,264. Now, a little bit of dash of intraday choppiness, volatility is what we experienced in today's trade. But the overall situation remains the same, wherein we are in an uptrending situation. The underlying trend is up. The short-term momentum is slowly easing off, but not as much as it can lead to any kind of a worry. So momentum, I would say, is still there. We clearly see that sectors or stocks are helping each other so that the index is sustained well, which we call as a nice index management. I'll talk about this a little later again. Now, a couple of levels have got well established in today's trade, which I can clearly see from the 35-minute time frame. I can blow out this chart, zoom in. So when we find prices bouncing back sharply, it creates a low and then bounces back. And when such a low is created nearby a round number, it does act as good supports and resistance. So today's low is the support that one can look for. It's around 18,119. It's close to 18,120. We can use 18,100 on the downside. If I change this chart to daily, one thing you would notice that for the last 3 trading sessions, the index is making a series of higher highs and higher lows. The bare minimum sign of weakness that we can expect from price is at least it breaks below the previous low and stays below it. It had done that once here, but then the very next day it bounced back. It had done that the same thing here, but again the very next day it bounced back. It had done this here and bounced back itself on the very same day and again on the very same day. So such has been the buying intensity that the index has not even made a lower low for even 2 days in a row, just one day. So bare minimum what we would like to see, or not exactly like to see, but what the bears would like to see is at least break the previous day's low and at least stay down. And that's not happened yet. So 18,100 we can use as a short-term support and 18,300 as the immediate resistance or the level on the upside to watch out for. But I feel, looking at the nature of the rally, and I have done an extension of the recent moves. I've used the Fibonacci projection rule, and I found a target of around 18,536 on the upside. What I've done is I've taken this leg up and I can mark them A to B and then this B to C. I've calculated this length and then projected it on the upside using 161.8, 200 and 261.8. These targets have been taken well care of, and it seems like 18,500 is what this projection indicates to us. So 18,500 is the target that I'm working with for the Nifty future. Is it reachable, gettable? I think so. As of now, the charts are not giving me enough logic, rational reason enough to be to doubt 18,500. So strategically we should stay bullish. And yes, if we see that the markets have at least broken below the previous day's low and it stayed below the previous day, then we can think about it. Till then, I think let's try and ride this trend and try to make as much as possible. And the same thing that I was suggesting to all our mentorship trader community members today morning is try not to go short in this market. You might pay a price. This is a high momentum market. Participation is picking in. So try not to go short unless you are shorting a weak sector, a weak stock within a weak sector which is completely underperforming. Barring that, please do not sell a sector or a stock just because it is at a 52-week high or at an all-time high. So strategically, look for long trades, fresh momentum breakouts. Bias stays positive. Same logic for the bank Nifty as well. It did open strong today, slipped quite a bit, and then it bounced back phenomenal. And there's a reason. There is one particular counter which helped this bounce back, and we'll talk about this. And so for the bank Nifty, 42K stays as the immediate level to watch for. Bank Nifty has been leading this recent run up, and I think that the momentum will continue. Before I go to that particular sector or stock which I'm going to eye very closely the next trading session, I was checking the provisional numbers of FIs, and we have another positive day of around 1948 crores. Now this is, I'm extracting the data from Stockage here on my screen, and this is Monday 7th of November, and it says around 1948 crores FII buying. And as I click on it, I can see that for the last, I think 7 or more than that, 8 trading sessions, we have consecutive positive buying days from the FIIs, which is a good thing. Of course, if I click on DII, it will be negative. If there's a buyer, there will be a seller. And when a big hand is buying, some big hand is also selling. But as I scroll down, barring a little bit in September, since mid of August, if you see, we have not seen this kind of positive sentiment coming in from the FIIs. The DIIs did exceptionally well. The recent selling, whatever had come during, if you take a look at the Nifty, all this time, whatever selling the FIIs continued, all was beautifully counterbalanced by the DII, and that's why Indian equity markets is one of the most outperformer in today's time, the biggest outperformer. And so now if the FII buying comes in, 18,500 will be just a joke. It will be just a matter of few days. So stay bullish and try not to short this market. Now amongst the various sectors, one particular sector which I'm eyeing on, which I'm going to eye very closely on the next trading session, is the Nifty Private Bank. Today we saw SBI opened beautiful gap up thanks to the results, and the PSU Bank group, thanks to SBI, Bank of Baroda, did really well. But when I look at the private sector bank index, the Nifty private sector index on the daily time frame, what I notice is a flaggish kind of a behavior. This is generally called as a flag. Generally shapes up in an uptrend or a downtrend. It is a sign of a consolidation. Volume should dry down. I can see momentum has slowed off. But sooner or later, it generally breaks out. And it tends to give this kind of a move that it had seen before. So if this works out for the Nifty Private Bank, then Bank Nifty is very easily hitting a new high very, very soon. And so if I am expecting Nifty Private Bank to break out, then there should be some private banks to help it, right? Axis Bank, HDFC Bank, IndusInd Bank, Kotak Bank. But my eye is on ICICI Bank. In fact, I think it's ICICI Bank which helped the Bank Nifty to bounce back the way it bounced back today afternoon. The stock is in an uptrend. It had recently lost a little bit of momentum, which is very, very evident here. It's kind of bottom out with a rounding kind of a behavior, and today it has picked up some nice buying, especially towards the end. It's kind of a breakout candidate. It's very likely to break out. And if all goes well, back to its previous swing high, which is a little above that 940 mark, should not be a problem at all. Yes, there can be some signs of a momentum slowdown on the weekly chart, but this move is not a significant move at all, a 920 to 940 kind of move. Next will be Axis Bank, and then HDFC Bank. Then you have Kotak Bank, and finally IndusInd Bank is still in a downtrend, so I'm not going to comment on that. So I'm going to keep an eye on these private sector banks and the Nifty Private Banking Pack, especially ICICI Bank. Let's see whether the stock helps the Bank Nifty to gain back to an all-time high or not. With that, I'll finish today's market analysis. I hope you've traded well and you've taken good care of yourself. Till then, take care. Good night.